So welcome back to the continuation of what we're discussing about profitable trading strategy, and then how you should manage your trade and then to be profitable. So how to manage your trade to be profitable. And so now quickly, let me just go back to where we were before the interruption. Now look at what I showed you guys. Now this is for scalpers, or so even 15-minute, 5-minute time frame and all of that. Now, so every trader who is a day trader, a scalper, and all of that, they are very conscious of something very, very important. And now, when they are trading, they look at swings to swing, point to point of their trading. All right. Remember, I told us that you have marked a point at place where you are trading. Now, we already know that this market was actually bullish, right? And so, point to point trading is that you can always pick some money, as it were. Now, if I go back to 5 minutes or even 15 minutes, whichever time, remember we're first check on higher time frame, right? Like if you look at 15 minutes, I say there's a fair value gap over here. So let's take it off. Sorry. Right? There is a fair value gap here that has not been mitigated. And so that this guy can likely return back to that point. And if it's that, so now when the market came here, now, so imagine you are trading. No, swing trader don't pay attention to this small move, okay? Swing trader don't pay attention to this small move because they go to like 1 hour time frame, 4-hour time frame and all of that. So they have seen that this is just a mere pullback. But of course, as a swing trader, will have find an entry to this market since probably targeting to hit pole to pole. Probably let's go to 4 hours, right? So swing trader target higher, move of the market. They will have been in the market for several days, right? Position and all of that. The market continue. So all this pullback is none of our business, all right? So they just continue doing what they are doing, and that's one of the things you need to understand when it has to do with swing trader. So, but a smart, a scalper, a day trader, all right, a scalper, a scalper day trader find opportunity at every move. Okay, they find opportunity at every move. Okay, so find an opportunity at every move is that they will look at market movement, and that's why I always recommend this support and resistance strategy trading pattern. And then it can actually help you a lot to make money within a shortest time, right? And then, but of course, you want to establish where's the direction of the market, and you know where you lean more on and know where not to lean more on as much as possible. Okay. So remember, we have said that there is a fair value gap up here. And so this fair value gap is where this guy want to come and mitigate. And once he come back there to mitigate it, then you are going to see the market to sell probably to the complete pullback that it wanted to create. All right. So ladies and gentlemen, just I go attend to where is this woman now? Attend to this girl. Right? So that's why I said is scalper use more of 5 minutes, 1 minute, and all of that. So for a scalper, will have been in trade here. Quite unfortunate, it was just in the interruption. If not, I wanted to establish a trade, and you guys will see. And I told you that I will have entered and put a stop loss below here. Why? Because if you go to 1 minute, structure is already broken. This is a low, this is a high, this is a low, and then the structure is broken. So, but for me, on 5 minutes, I've already entered, right? Will have even entered because what do I check on 5 minutes? For instance, I know that there's a fair value gap left behind, and the market has grabbed liquidity here. So you pay attention to few things that, of course, you can see it's a borrowed terms from smart money concept and all of that. But it's a normal thing. Markets create, so you have liquidity in the market. And so market move and magnet from one liquidity level to another liquidity level. Especially, liquidity on 15 minutes and all of that can be very, very, so we call it buy side. That's market maker model. So buy side and sell side liquidity and all of that. So this liquidity was grabbed, first, and then the market returned back to the zone. Okay, and so that what to expect the market. This is an engulfing candle. So if you go to 5 minutes, you're going to find this proper, right? So this is a return, all right, but you want to wait for it to go above, and then a breakdown, never got back to this point, then this. So even if conservatively your entry was here, but for snapper entry traders, some of them smart guys will have find an entry in the zone and put a stop loss below here so that the stop loss will not be too bogus for him, and then he's targeting to take profit here. Yeah, so as soon as the market move much, he move the stop loss above the break even, so that whatever happened, remember, he just is scalping, right? And so sometimes most scalpers don't even pay much attention to what we pay attention to, because they are taking the movement in piecemeal, in batches, and so it won't give them so much headache, because they are seeing the market, they are picking it as the market is coming, right? And in small move, it's all about price action. So once they get the right price action, they act accordingly. And that's what it is. Now, for some persons, so now if you see Bitcoin, I sold Bitcoin down today, right? And there was another presentation of opportunity. But remember, look at it. So we said, if you go to 4-hour time frame, you're going to see zone by zone, right? Good. So look at Bitcoin, right? So this is 4 hours. So here, this is a low, right? This is a high. Now I took out this. This is a low. This is a high. This is a low. This is a high. This is a low, and this is a high. So this high had been taken, right? So now I'm broke. Now it pulled back to 86,000. We actually expect it to pull back to about 85,000 or thereabouts. Why? So let me take a trend line or counter trend line, as the case may be, or trend line, whichever one. Now, if I mark this point up here, so that was why I actually expect the market to come down to about $85,000. Well, will it still come there? Well, I do not know, because the market overall was actually bullish, so I expect a massive pullback, and so this is a pullback. And now, what other confirmation am I going to keep to actually measure this? So I probably can take what I call reversal tool, and then we go here, and then I'm going to track to this point. Now, so market actually had a shallow pullback. That's what I can say. Market actually had what? A shallow pullback. This is shallow pullback. Yes, this is shallow pullback, because it has pulled back. Remember, this is 4 hours, guys. It has pulled back to 38 Fibonacci level. That's a shallow pullback. So that means, and look at it, this massive engulfing candle. So after this, now you probably will have gone to a lower time frame. Probably the internal structure of 4 hours is actually 15 minutes. And look at it. So you will have find an entry at this level, right? Why are you going to find an entry here? Let's check it vis-a-vis. Number one, this market returned back here. Remember, but it will be very difficult for you to do this if you are trading too many instruments, right? So if I box this support, the market actually came down and move up and create a kind of double top, a double bottom. Now, possible. Now that I will have even entered here, but remember, that will be delicate, right? That's why you use stop loss. Why will it be delicate? It's very delicate because you are entering here. Look at it. To long. And that, because this is a long candle for me. Okay, this is even 15 minutes. If I go to 5 minutes, I will have find an entry earlier. And how will I find this entry earlier? Okay. You have found the support here, and then this come back and give me an engulfing candle. I may not have been patient to have waited up to this level, because this already taken out. This pullback will have been my entry here. And then my take profit will be here. My stop loss, of course, below the swing low. All right, can you see now? So that's why most time people enter trade and they stay there, and the market again go very well, and still come against them, they begin to ask questions. What's going on? Why did the market go against me when I was in order? Because market, yes, you expect the market to go to so place, but it had a lot of things to do before it actually get there. So imagine when we are going to extend up to this point, that's going to give us about 1:6. You heard me right? 1:6. I'm telling you, 1:6 from this point. But this can be very difficult to do if you are trading too many instruments. You heard me right? If you are trading too many instruments, this will be very, very difficult to do. Very, very difficult because you won't be at alert to see all of these things we are seeing. Before you jump from one instrument to the other, the market have changed. Aha. So look at this guy. So it's going closer gradually, right? But what will happen? What if you mitigate and break everything? That means you say, I'm over, I'm not going to go down again, and all of that. So that's why some of those instruments that are commodity and all of that, if you are a scalper, you rather scalp those ones. And then currency, you can swing it because currency can be moving slowly and all of that. Okay? They are very, very important. So let me take off this now. Okay, do we mark this? Let's see. 4 hours. We did, right? I don't think so. We did not. We do not. Because 4 hours, I still not see the key level. That means we do not. Okay, so let's do that quickly. So first we said we go here and then we change it to line chart. Then we take our horizontal line and then we take it again to the bottom. Okay. There hasn't been an impressive move in this currency, appears rather. Yeah, so like this, right? Another key level, 1, 2, 3. So this one, okay, right? This will be a touch point. I think we should have it this way. All right, candle. Yes, I think we're good. All right. So this guy, so can we say this is a key level? Not really, maybe 4 hours. So this guy that actually, this is a downtrend. You see that? Good. This is high. This is low. 1, 2, 3. High, low, high, low, high, low, another high. This is still higher. This has not been taken. And so let's see if now to return down. So let's go to 4 hours. So 4 hours, this is a low, this is a high, this is a low, this is a high, it's a low, this is a high. So now, so where is the immediate swing low? This is the immediate swing low. Let's take this. Right? So here is a high. Okay? So we have some liquidity here, which is like a support 4 hours. So this is a swing. So I can take it from the body. So that is to say, within this range, we're expecting some move, right? So let's take to check where should we enter to buy this market. So it's exactly that. That means maybe like if you're going to have a shallow kind of a thing, then if it is not, returning back to this point. And so then you go to 1 hour. So you see 1 hour. So you see 1, 2, this is swing low. Then it created a move and continue. So that means we're coming down to this point. And so let's just go straight to 15 minutes. So in 15 minutes, this is the liquidity. You can sweep down to this point, get this liquidity swept, and I think it has even done that. But you now need to see reactions that's going to happen. If not, You are waiting for the market to come here, and then it align with the 50 Fibonacci retracement, right? Which is another liquidity. See, please, when you are trading now, so like our trade that is running, that we say will have bought, will have been in much money by now. Look at what has happened. This is a liquidity sweep, guys. Can you see? I told you guys, if you were in, you are seeing this point. So this is a liquidity. He has swept the liquidity, so returning back to this point. If it's not rejected at this point, then you are going to have the market continued right up. This is what scared sometimes some people when you enter a trade, because I think I wrongly entered a trade yesterday. I was busy and I didn't monitor to take profit. Yes, down somewhere here, and then it's still running. So I just let it be, right? So some persons will be afraid because they don't even know why they entered the market. There was no confluence, there was nothing to check why entering the market. So they just gamble into it and all of that. Okay. So you can see what I said Bitcoin now. Now, so you can see massive, right? For anyone who was following, who is detailed. But sometimes that's why I don't believe, not that I don't believe in signal, but I don't love the idea of when they just give you signal, you do not have an idea, basic idea. Because market can change, and you should be able to have an idea of why did it change and how long will it go, where is it going to get to, so that you can do the needful. It's very, very important. Are you seeing now? So this guy is going to return back to this point. So when he return back to this point, so if you are the type that have time to be scalping, then you will have short, right? And waiting for it here. When it land here, you now buy back again once it give you the expected reaction you are waiting for, right? So those are the things people don't pay attention to, and most time we miss trade, we do wrong calculation, we waste. But look at Ethereum, the same thing. It came down here. This is 15 minutes, so you will have scalped enough, right? Because this is this, right? So it actually got out here. Now, so if we go by our strategy, support and resistance strategy, so I mark this week of the candle and extend it, then I allow the market to return back to it, or double bottom it, or weaken it, and then engulf, and then I'm entering. So that means entering my market here. I just hope I can see, but virtually all of them will have done the same thing, right? So, and then that my stop loss going to be here, right? 1:2 going to be somewhere there. Look at it. 1:2, almost done, right? So, because it's your work. And sometimes you can cut 2-3 trade for a day. You're okay. Don't struggle yourself into it again. So imagine you have caught the short here, and then you are catching the long again. So you should be okay for the day. Or if you know you still have strength and you want to continue, but not over trading or trying to get some things done unnecessarily and all of that. So now if you go to 5 minutes, you're going to find the same thing. Right. So look at 5 minutes. Yeah, for scalper, just go to 5 minutes. Right. Here is it. So that means look at what we're going to be happening 5 minutes. So where is the weakest candle, the lowest candle that created the low is this guy. So take it to the body and to the wick of that candle and create the zone of your support. If it's resistant, the same thing. Then market rallied up, you want to return back to the origin, back that to grab liquidity down or whatever, then bounce, then you are finding an entry. So whichever way your entry, so perhaps you have found an entry here, and then you are putting your stop loss below the wick that created that low here. Then 1:2, so 1:2 will have been done by now. But be careful, because sometimes, and that's why we recommend for you not to trade altcoins that are not having volume and don't weightier. So if you trade on weightier instrument, it's going to harm you, because you will jump into some market and the volatility on weightier instrument can be very massive. And so their structural movement can be very shallow. Okay. All right. So you see BNB have been pumping as against the movement of Bitcoin. So I'm not surprised for you seeing this kind of thing now. If you look at BNB have been pumping why Bitcoin was, other coins were dumping. So this dump is not least expected. And if you look at it back to this point, it got to an area of importance, which is a kind of support. So if you take this your line, so I can take this now, for instance, look at this, and then expand it out here. All right, so it's expanded. So I'm going to clone it, right? So here we go. So the market has come back here, has grabbed liquidity. Now this is a key level. So, right. So now, but this is the point. So this market now, looking at it, if I sell down on BNB now, if I sell BNB down now, I'm going to multiply my stop loss above here. So let's look at it. Maybe you are trading futures and then you say sell BNB a little above the week and then 1:2. Okay, 1:2 is almost to the key level. Now, so what do I see in those places? So there's a liquidity here, there's a liquidity here, and here, and all of that. So we just want to target 1:2, right? So 1:2 when you get there and all of that. So I just hope I could find a market that will do justice to that. Yeah. So right. So the same thing on gold. So this is massive. Look at gold. Even though this guy went 1 hour. So I wanted to go to 15 minutes, 5 minutes. That can be easy for you. So look at gold. This is 15 minutes. This is a low, right? This is a high, right? This is a low. This is a high. This is a low. This is a high. This is a low. So it's an uptrend on 15-minute time frame. Now, what are you looking at? You're looking at this point. This is a liquidity area. Gold can get here and grab the liquidity and slump down. Another liquidity up here. So it left liquidity up. Okay. So if you go back to even your 5 minute, right? So look at 5 minutes. So market was moving down, right? Here, you got this. So for instance, it's very not likely that you're going to pick from this to this to create your support initially. And what happened? Jump up and it broke down. That's the kind you say grab of liquidity, but unfortunately could not retain above the zone. Then that means you are going to mark the next one. Have you seen how meticulous trading can be? All right, so good. Now the market returned back, right? And right, so here, returned back here, but couldn't get here. This is a weakness. And then, so some people jump in immediately, but it's not necessary. Now, so some people now have to check what happened. Market move, and then this is fair value gap or something. And then, so the person is expecting that this market is going to return back to this. So these are confluences, these are area of interest that you want the market to actually get to, and then a touch there, right? Return back to this point, and then that's your entry. Now, your entry, so that means at this point in time, you are putting your stop loss still below, on the safer side, still below this point. That's too big, right? So you can reduce above this point. Then 1:2. Your 1:2 will have been achieved. Now, this is the difference now. Now, you have entered, and that's why I always tell people when you're entering market, don't enter your position in one hit. Split it. If you want to use 0.1, you can use 0. If you want to use 0.1, if that's what to allocate for that account per trade, so you can split into 3 or 4, right? So 0.1, so divide by that 0.025 in 4 places. That's cool. Now, the first take profit is going to be taken there, or the second taken there, and then the other one, you're going to be trailing it. Now, chances are there that when the markets give you your first take profit, that you're going to be moved out of the market. Why? Because the market returned back and it has taken your break-even point stop loss. Now, I think this is one of the things that I've seen and I told myself the best trading strategy, right, is to stay, right, on one instrument per trading session. And so that when anything happens, it stop you out, you wait for appropriate rechecking your, dimension again and fire back the market. But if you will jump from too many instruments at a trading session, it's going to give you issues. So you will miss out, you will stop out of a trade and you won't have means of firing back into that trade. Does that make sense? All right. So those are the issues I've checked and I've observed that this can actually affect our profitability. And so, but it requires discipline. It's not easy. It's easier said than done. Many people would, I will do this, I'll do this. That's not true. It's quite cumbersome because what you want to use money for are too many. Okay, so you want to just drag at all costs. I'm going to move this. Oh, okay, we said this thing that the market was going to go up. Okay, and so we say 1:2. It's almost hitting that 1:2 for this. So everything you do here is applicable any instrument, anywhere, anytime, any day. You get it? Anywhere, anytime, any day. Now, other thing most people now use is like supporting tools. So you can use MACD or RSI. Look at this MACD. Now, let me return this MACD to what it used to be. So I was the one that changed it. Okay. So this is what it used to be, a histogram. And then MACD here used to be line. Then, of course, I think this is blue. If we didn't get the type of blue it used to be, let's just manage it. All right. So some people, so I recommend, I said, you can use a momentum indicator, and some persons, so a momentum indicator to just help you to get divergence and convergence and all of that. So momentum indicator is good for you to identify some divergence. Are you getting it now? Like there's a convergence here, right? This is your 5-minute chain link move down and all of that, MACD cross, makes sense. And of course, you understand your market structure very well, and that give you an edge. Oh, wow, we're in confluence, we're together, and all of that. That's why you're doing all of this. So if you look at gold, I think similar thing to happened, right? You have so now, so like gold, even while you've taken your profit. Now, one of the things is they look at gold. When gold have been sold, what did it show here? It pointed a potential reversal here, right? You can see that a potential reversal here. That's why I confluence indicator, especially momentum indicator, with your price action, so that you can see things, right? Market has actually, you have seen, this is Gravestone Doji, all right, or Vate Hammer, whatever they call it. Now, at the end of the day, followed by an engulfing candle, which is a potential reversal, and your MACD crosses. That's cool. Now, so if you are going to find an entry here, so you're going to put stop loss above this guy, and you sell down. Look at the histogram. I think MACD is one of the most very friendly, beginners user friendly indicator that will help you to identify momentum in the market so that you can still be on board, right? And after then, you will have closed your trade 1:2 risk reward, and then so whatever thing. So for if you look at it, let's take it short, probably after the engulfing candle, your stop loss above the week, and then 1:2, 1:2, already done. Right? But it's difficult for people to obey all of this rule when we start trading. Why? It's so difficult. I don't know why. So most time we forget it until we lose trade. And you know why? One of the reasons is that we are trading too many things. We are facing too many things at a time. Face one thing at a time. All right. Okay. This guy, I do yes, you get comfortable when market refuse to mitigate an area. I don't yet get comfortable, right? Because we said it should go and mitigate the fair value gap. So I wonder why, whichever way, okay, whatever he wants to do, But I wonder why it just do that right now and all of that. So as if, so if this close, and this, all right, so that means continue. So, ladies and gentlemen, and that's what I have for you today. And then pay attention to, okay, additional thing is that you want to now use trend momentum. So, indicator, that's what we'll talk about moving average. But don't just clumps your platform with, indicators. No, no, no. So, like this 10 in one moving average. Okay, this is 10 in one moving averages. So you're going to edit it. Go to the 10 in one, and then we're going to just use two out of it. So look at it. One is 200, then the other one is 50. Okay. So EMA. Okay. So this one, right? This one. Okay. If you want to look it in black, you can leave it in black. And then you go to style. You want to make this one very thick. I make it very thick. And then the other one, I don't change it. I just allow it to run the way it is, very tiny. And then I want to scroll down and remove all this label, okay? Then you're good, okay? Okay, so now let's go. So you have moving averages. So if you are the type that don't understand trend, how it actually works and all of that, so the moving averages will help you. Look at it now. Imagine you are trading with fire. You already know that this is an uptrend. Look at it. Look at it. Okay? Now remember, I'll talk about your price action, as it were, and your key levels. So look and see your key levels. Right, look at it. Okay, so at a point you'll be confused, especially with some instrument, if you do not understand price action. Now, here, if you do not understand price action, you're going to run into problem here. Now, what will happen? What really happened here is this. Not understanding our key level, price action. So remember, this is your 5-minute time frame. And now our market have come down here. Very simple. Remember, I told you always identify your support and resistance. So this guy, you have done this, and fortunately, look at it. This is the first candle that you saw, or even the two, and then this one actually move up. It's a return already. After this return, this engulfing. This is your entry. After this engulfing, this is your entry. Now, in this your entry, now you're saying, okay, my entry is here for this guy, long, and then 1:2, you will have been out since because your stop loss there. So, but sometime when I'm below 200 moving average, I always get consciousness of looking at what happened at the 200 moving average, the market moving. But don't entertain fear once you're in the market. And I create two parts in my trading. First, I have multiple entry, and the first, second entry is to take profit at those my risk reward ratio point. You get it now? To take profit at those my risk reward ratio point. That's the first thing I do. The second and the third is to trail to potential high point that market's going to go to. You get it now. So that's what we do. And so you can see now what now happened. What the advantage of the 200 moving average for you is that it helps you to now say, oh, well, now we are bullish more. It's now confirmed uptrend because 50 moving average is now, you don't wait until the cross happens. So a lot of people say, let's wait for the cross of 50 moving average above 200 moving average. You have left a lot of opportunity behind. And so some market can just change immediately. So if not, you'll be waiting that, okay, this market until you get here and then 50 moving average cross 200 moving average. And remember, it does not cross immediately. Market would have gone up before. In fact, before this shows, market would have been here. Yes, yes, just telling you. And so that can delay your entry to a large extent. All right. So here the market, and then the market continues to do what it's doing. Now imagine at this point now, it has not crossed, still showing that we're still up somehow. So because look at what really happened now. The market I say I'm always not comfortable when it does not mitigate the those area of interest, as it were. So now if you look at it, you can see that the 50 moving average is still above 200 moving average. It has refused to cross. It may still cross thereafter, but all of that. So, but before this cross, so you are not only just depending on all of those tools to fire an entry, but you are just using them as a confluence or as a support for your trade. Okay. Right. So you can see gold now is pumping. Crazy, right? Very amazing. All right. So you can see gold. Now, if you are waited for gold until it cross, that's here. Now, someone's already making money from here. Can you see now? So that's why you don't depend on the indicator. You only use it as a support or as a confluence. Does that make sense? All right. I think I have a short position on this guy, and I think it should be running now. Yeah. I have a short position on USDJPY, and so it should be running now. And then, but up to now, this has not crossed 200 moving average, right? But by market structure, look at this here. This is like kind of double top and all of that, and the market consume. Now, there's other things to check on the fundamentals. The fundamentals of the sentiment of the market trend or participation. Aha, see what I told you I was not comfortable with. See it? Told you I was not comfortable with this because this ought to be mitigated. That means if care is not taken, this guy had resumed the uptrend. You know, it's an uptrend and not a downtrend. It's a bullish market and not a bearish market. So it was just a pullback was creating and then to continue. So you can see like this guy already had moved from this up here and then got a bounce at 200 moving average. And so it's going to continue again to go back to where it came from. And so how do I confirm that? Sometime, and I said even when you're using your moving average and all of that, but you have to be very careful because sometimes, so imagine while you're here, this is a very fantastic move. Then the market still found it way back here and all of that. So there are liquidities over here. So the market can juggle there and then get a push. Are you getting it now? So that's one of the things you have to pay attention to. Okay, so let's look at what this guy's going to do now here. Right. Good, good, good. Wow, amazing, amazing. Gold is fantastic. But don't trade gold and trade other instrument at the same time. If you want to trade gold for a time being, trade it for that period and maximize everything you want to get from gold rather than uh juggle from gold to Bitcoin, Bitcoin to so, but you can have those ones in your list, right? So your list can contain them. Then you pick the one you want to pick per time and follow up in the trading, right? So you can see this is a week, long week, and engulfing candle. That's passive. That's a retaliation, right? Euro USD, fantastic. Now, if this is a key level, that's amazing. Let's check. Was it a key level? Yeah, it is. Wow. Can you see? Wow, 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 wow. So you don't even need a soothsayer to tell you this. Okay, yeah, I think when we're trying. So this is a key level. And that's, you can see the reaction. Bounce, boom. Then continuation. That's massive, 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 guys. That's massive. I think I have a trade running on the Euro USD without stop loss. So this is a key level. And so sometime now, you probably wouldn't have entered Euro USD because say it's still below 200 moving average, all right, because of this period. But this is a key level, respecting the previous time. Before it juggle up to this point, you'll have been in much profit. Why somebody is still waiting to see a confirmation of the market, right? Meanwhile, you're already running in profit, or you will have even taken some profit if care is not taken. So you can see it exactly return to this key level, and then you'll find in an entry. So go to 5 minute. So look at it. That's amazing. Can you see now? That's super, super amazing, guys. So where are you targeting next? Next, this is this key level. This is this liquidity level. So, okay, so this liquidity level. So you will have been in probably here. So you expect a pullback and all of that. And then, so you will have been into the trade and rocking it. So we saw this guy, massive, right? Just similar to Euro USD. Okay. Let me check if I can see a place to enter, just to show an example for you guys. Euro USD. We expect a pullback. So after the pullback, should be an entry. Okay. So Euro USD after a pullback, then an entry for Euro AUD. So let's take small position. I'll show you. Well, just take a small position entry. All right. So you can see the pullback now is not happening. Probably you expect the pullback somewhere down here. Okay. So let me just take small position. So 0.003, very small. So see, I've entered negative, and then let's look at down here, 1.080 whatever. So I'm going to do pending order there. So I'm doing pending order here, right? 0.05. So I have a pending order here. Because I know it must pull back before continue orb and all of that. So why I said phase one instrument at a time. If we're following and we come here, you see, we'll have been in this trade from here, right? That will have been massive. That will have been an amazing position. That's about how many pips? 27 pips, right? Okay. So now this continues. So let's look at 15-minute time frame. Let me see to what extent will this guy go. So we're saying all this about 1.08535 region. So let's get 1.08492. 1.08492. 1.08492. So that's going to give us $11. And the market get there, it's going to give us $11. No, we'll use very small lot size. All right. If I use 0.1, that'll be a different thing altogether. Okay. Right. So let's return back to this guy. Right. So now, so there's a problem, guys, like I told us, and that's why when you are trading, phase one instrument per time. If you want to swing, let it be a swing. Now look at what I told you guys here. Remember, I told you that we have sweep liquidity here, and then we're going to bounce. That time, we put nothing here. We say we're going to bounce. And then there was a fair value gap here. But this is the challenge now. We've got into the fair value gap and we didn't have a sharp rejection. Yes, we didn't have a sharp rejection. So if we do not have a sharp rejection and have a close below that fair value gap, it's going to be invalidated, right? It's going to be invalidated because at the end of the day, the market will jungle. Remember, it's an uptrend. So it just start going sideways eventually here, but it's an uptrend. And so if you juggle out of this point and break this, then it continue up to where it wants to get to. Remember, we had a key level above this point here, over here. Remember, this is a key level, if I'm not mistaken. Okay, this is a key level we left. So we say we expect a pullback, but at this point, you're already seeing what this guy is doing, right? So if you didn't break, if you didn't return and close below this, then it's going to be a problem. So because this is one of some of the dimension of this, so that's why sometimes some of those heavy volumes commodity in Forex is better you scalp them or you find a good entry at a reversal point, right? Than putting yourself under so much pressure in trading them. Right, so I think I'm going to pause here and for this interaction so that to help yourself. Okay, this guy already on $1 profit. Look at it. Okay, so we're $1 profit. So because we were not following, so we're just doing what we're doing, right? So if we had picked that, we'll have been in profit. So we'll be in profit, we'll be more better positions. Maybe by now, we'll have TP1 will have been taken, probably maybe $20, $50, $100. Because we're going to use like 0.5 lot or 0.1 lot, so which is $1. And so if it's $1, let's check it. If it's $1 up to this point, it's about 33 pips. So that's about $33. So if it's like 0.5, that's about $5 multiplied by 30 will have been $150. So that's it, guys. So please pay attention to learning. It's very, very important. Thank you. Now have a pleasurable day.